Ladies and gentlemen of the crypto space, we're live on a Tuesday at June 15th at 12:16 p.m. late today. Busy morning. Lots of responsibilities at the office, but Big Daddy takes care of business. That's the only way to do things. You got to extend your due diligence. You got to cross your T's, dot your I's, and there is no better time to try and win but today. Let's make those better choices, better decisions. Let's execute. Let's capitalize. Let's crush this. Let's crush these markets. Let's crush business. Let's crush work. Let's do everything that's expected of us for our companies, for ourselves, for our family, and that's why we do what we do, and that's why I do this stream. Because I can do better. We all can do better. And today is the day to do better. RJ, what's up? Good morning, quantified. Hey, Noah, wondering if you could recommend a portfolio adjustment in light of Fed announcement tomorrow, worth moving in some USDC. All right, let's dig in. Well, aside from a joyful introduction, let's start with the title: Equity and Working Capital Storage and Opportunity Cost. We got balance sheets here, boys. These portfolios have evolved. Holding assets is pure opportunity costs. Assets need to be put to work. At minimum, an asset should be collateralizable, so a portion of the equity can be deployed as working capital. There's a plethora of assets in the DeFi space that go far beyond what collateral or the significance that collateralizable assets have on the balance sheet, and this meaningful. We got dividend-bearing instruments. We got platform revenue sharing opportunities. You got ownership in platform revenue. That's extraordinary. So there's a good balance that's needed between value storage assets, between Bitcoin and Ethereum, which are collateralizable, so you can deploy their equity as working capital. And then you got revenue share assets such as Curve and Convex at this point, Yearn as well with YVECRV. There's lots of choices, and then you have obviously business models such as an Aave curve play, which is where you take your collateralizable assets, you borrow working capital, you manage your health factor, and you deploy that cash into the forex market curve. So you're able to turn a decent portion of your equity into working capital. So all this together is not straightforward. There's no cookie cutter. There's no instruction manual how to deploy it. Operating a business, you got to figure out the balance. You got to be able to do what's representative of how you view the market, how you view the global macro financial situation, and yeah, it's a constantly iterative process. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto, non-custodial DeFi, or nothing at all. Bang! Let's pop it over to the main screen and see who's in stream. I hit the first two, but USDC, I don't know. I'd rather borrow USDC against using equity. Um, Clearly, you could have an entire stock market collapse, and the crypto space could thrive. You could have correlation. The former implies inverse correlation. You never know how these markets are going to be, how they're going to behave, how they're going to function. What I know is there's honor in these markets. These are respectable assets because there's literally nothing left to respect in the dollar. It's representative of perversion. It's literally not money anymore by definition. It's just purely a medium of exchange. Has no value storage properties, so it's not money. So there's a lot of semantics involved in understanding these assets. So clearly, Bitcoin is horrible as a medium of exchange, but as value storage, so it has half the properties of money. It's not money because it's not incredibly meaningful as a means of exchange because of the volatility of its dollar denominated price. But maybe the denomination is wrong. Why are we denominating Bitcoin in terms of dollars? So there's a whole lot of perspective involved in understanding these assets and these markets. I have barely any cash on the balance sheet, principal wise, quantified, if that means anything. It's what I do is not what you should do. You should do what you conclude is subjectively appropriate. You need to respect the portfolio. Everyone needs to respect the portfolio. You need to use your portfolio to express your view of the markets. You need to deploy your portfolio as a balance sheet to capitalize on the markets. That's the opportunity here. Everyone who's involved with DeFi has the capacity to start a business. How you structure it, whether it's a corporate implementation or you're just calculating revenue and balancing the books as an individual, that's a subjective consideration as well. What's pertinent is that how we engage with these markets is unlike anything we've ever done with legacy financial markets. You can't do shit with legacy financial markets. You can't do anything with securities. And the fact that securities are called equities is absolutely mind boggling to me. Oh my God, you can't do anything with a security. It's not an equity, it contains no equity. I cannot extract the equity. Sure, you can get a margin account, but and other bank products, but the friction, it's so filled with friction. It's not obvious, but when you could take an asset and go to Aave and collateralize it and extract equity in 2 seconds, it makes securities look like they have no equity. All right, let's keep it going. Robert Shaw, good morning. Ali, we got, hey everybody, glad to be here with you guys. It's always a pleasure. You guys make my day. Truly, hey guys. I've started to slowly understand how to navigate my way as a liquidity provider, which is a concept super new to me. You're providing liquidity, facilitating transactions, extracting a transaction fee in the process. That's a business. Costco, Noah. Igor, hello, Noah. Always a pleasure. I hope I got a few sentences on how to start. What are some of the best practices? Manage your health factor, manage your collateralization ratio if it's a make or DAO deploy. Never risk liquidation. Um, Accumulate value storage assets, but not to excess because there's opportunity cost. Access equity, which increases your working capital to increase your revenue stream. Capitalize on platform revenue share assets, predominantly Curve, Convex, and CVX and Yearn. And there's plenty of assets across the board, but to understand them and to appreciate them, you got to look at them from an opportunity cost perspective, from a value storage and collateralizability perspective, and ultimately from a balance sheet model perspective. If you can't model it in a balance sheet where you have principal and debt all deployed as working capital, that's massive opportunity cost. So the opportunity is to do as such, is to look at things from a balance sheet perspective. That's the unique opportunity of DeFi. Have you ever dabbled in leverage yield farming and Alpha Hamor? I like V2. I like Alpha Hamor V2. The problem is I'm not. I go back and forth with exposure to double-sided pairs or double volatile pair pool positions versus even single-sided pair pool positions pair with like a stable coin. So I have no cash deployed right now in like a curve position. I'm not providing much liquidity. I just see too much opportunity owning a part of the curve platform. Um, I mean, literally, you're owning dividends from a digital forex market. That is crazy. That's crazy. I don't know how else to say it. So that's my subjective opinion that almost everything else seems like opportunity cost to me. Curve might be the most, for myself, might be the most profound opportunity I see across legacy financial markets and the DeFi space. I mean, I'm earning yield from every one of the liquidity providers on the Curve platform and every protocol. They've expanded the Phantom, they've expanded the Polygon, they're on Ethereum. They're going to go everywhere because why not? And I have rights to a portion of all transactions across all platforms. Wow. That's my story. That's what I see. Now, clearly, plenty of people love assets, and there's plenty of reasons to consider wonderful assets like Rook and Mist and Visor doing interesting things. I don't know what the heck happened to Method. Seems to have evaporated vaporware. a fart in the wind, or maybe not. I'm not judging. But it's all subjective, meaning you all have to come to your own conclusions about how best to deploy capital. I always advocate for the balance sheet because I think that's the opportunity of the DeFi space. Quantified can always sell futures against your positions on CeFi after the meeting. Possibly there's about an upside, but a market sell-off, you could collect the basis change. Yeah, you can get technical with derivative products. Dr. T is in the house. What's up, brother? How are you? I hope all is well. I know, there's a we have real world issues. I mean, you got your patients to consider, and I have my work obligations. And what I love is that when a balance sheet is optimally deployed, my friend, you don't really have to pay much attention to it. I mean, the goal that everyone should have in mind is that you have these assets that are working in a balance sheet modeled implementation. So the business is working for you, so you don't have to work. If you're babysitting your assets, if you're spending time worrying about your capital, that's the thing to think about, guys. The opportunity here is that your capital is working for you, so you don't have to. And all you have to do is achieve a configuration. There's plenty of configurations you could do on Matic and Aave and Curve. There's plenty of configurations, but it's about eyes on and work and time. So if you're spending too much time, you have too much eyes on, you're doing too much work, you're missing the opportunity because the opportunity here is to do little to no work and having your capital work for you. See what I'm saying? See what I'm saying? Heisenberg on CVX, are the stablecoins farms algorithmic? I'm not following. There is no stablecoin farms on Convex. Convex are derivative assets atop Curve, which uh, accumulate instead of compounding like Yearn does. They accumulate CVX and incentivized emissions as well as CRV. So meaning those incentivized emissions at the Curve level are provided to you at the convex level, whereas urine just liquidates them and auto compounds into the principal assets. So I want the curve emissions because you guys know how I've been describing curve. So I opt for convex over urine, very much so. Um, Truly, Ave Sushi also revenue share. Yes. Well, Ave no revenue share, but sushi, yes. X sushi is meaningful. So I just, if you compare X Sushi versus Curve, it's just obvious for me. But yes, X Sushi is a revenue share, and that's very meaningful. FM, where do you see the price of Curve going? Fair value price unknown. I have no idea what his price will be. For me, what's pertinent is the pizza shop uh, description. If I have $1 million pizza shop and it's producing $5,000 a week, and the property value tanks, and we have a housing implosion, and my pizza shop is now worth a $500,000, making $5,000 a week, nobody in their right mind is thinking about the pizza shop's value. There is no business owner in the world that's thinking about the value of their business. They're thinking about the revenue on a weekly basis. So I value the performance of my portfolio in the amount of weekly revenue, not in the value of the portfolio. Contrarian. Truly, what is APY unlocking curve? I think like 100% right about now. FM, do you think X token price will come back? Well, I hope so. I have a little bit of XTK. Um, Speculative. I wouldn't deploy capital to it, but that's another story. It's a lovely asset, wonderful team, wonderful technology, wonderful developers. I really give a lot of credit to developers that are able to build such platforms. It takes a lot to be able to build such tech and smart contract implementations. Digiverse, what do you think about Algorand? L1, cool. I could care less about another L1 unless I could consume it and put it to work. If I could, if there's a money market, if there's critical mass liquidity, and if there's DeFi protocols that facilitate critical mass monetary velocity, I'm cool with it. If there's an opportunity, I'll surely move capital there. But unless there's not, The platform token, you're talking about like maybe the platform token, like Ethereum, Algorand, Dot, Matic for Polygon. The only thing you could do with it is collateralize it and access the equity to pad your working capital. So you're very limited, and there's a great deal of opportunity cost with excess platform tokens because over collateralization means you're pretty much only accessing 30% of the equity contained in any of those assets. So you're going to negatively impact your total amount of working capital. Food for thought. Um, what do you mean when you say you own a part of the Curve platform? Surely not owning tokens more coin. Yes, Curve is owning a part of the platform. When you own Curve, you will get a portion of all transaction fees for the entire platform, uh, likely across chains in some regards. I don't see why that's not either the current configuration or the inevitable configuration. So Curve is a dividend-bearing asset that facilitates ownership of the platform transaction fees. FM, do you think staking Curve on Curve is the right play or buy Curve now? That's a subjective opinion. So clearly, deploying dollars will yield Curve, which is meaningful. I recommend all new participants in the crypto space don't own any assets until extensive due diligence is deployed and a lot of education is done. You have to acquire the education. It takes time. So dollars. If you're new to crypto, you should be doing nothing with assets because you have to understand the way these systems work. You have to retrain your psychology because the legacy financial system is perverted and has no education with regard to business management or any of this stuff. So dollars. If you knew, I'll say it again and again and again. If you've never done anything in the crypto space, if you don't know how to deploy these assets, you don't know risk management, risk tolerance, portfolio management, or even the concept of balance sheet of a business, just keep your money in dollars and throw it on a forex platform or throw it in an AMM USDC USDT pair, maybe on QuickSwap on Polygon. Because come on, they're dollars, and there's only systemic risk, so there's not impermanent loss or slippage or anything like that because they're dollars are dollars. So if you want exposure to crypto, but you don't know what the heck crypto is, keep your capital in dollars and crank out 20, 30, 40, 50% yields. We used to pants off HSBC 0.002% in the government money market, though, because the money markets on the crypto space are extraordinarily more lucrative. Are you holding any LP positions on Phantom? No, because I want to own the I own Curve on Phantom. I own the Curve platform. I don't own it, but I own a part of it. There's a lot of people that have a lot more than myself, but I own a part of Curve. Sunny in the house, always a pleasure. Truly, wow, Curve lock goes to VE Curve, right? Yes, on the Curve platform, but you could also take Curve and wrap it in a derivative asset called CVXCRV or YVECRV, which facilitates additional revenue as well as external platform ownership, owning a part of Urine and owning a part of Convex as well. Yeah, Curve's a heck of a thing to wrap your head around, truly. Um, Heck of a thing to wrap your head around. Brian, Curve is confusing. I withdrew my money. I have no idea where my money is. I'm not quite sure what that means because your money is probably stable coins. Withdrawing stable coins goes to your wallet, and maybe you withdrew a balanced proportion. So you got, like if you put it into three pool, you're going to have USDC, USDT, and DAI. So if you withdrew a balanced proportion, you're going to have those three specific assets in your wallet. Maybe you withdrew a single asset and then it's in that specific asset denomination in your wallet. But if Curve is confusing, Aave is the place to be. Curve is not the place to be for new crypto participants. Aave is the bank, is the primary money market of the DeFi space, and Aave is very, very straightforward. Just like a normal bank, deposit, withdrawal, deposit, you get interest. Withdrawal, you get your capital. So Aave is the banking infrastructure of the DeFi space. Julie, do you know what the Curve token inflation is versus 100% API revenue stream? Are you being diluted, or the API maintains your stake in the network? So right now, Curve is constantly being diluted. It's a decaying inflationary schedule, so it's less and less over time. We're June, July, August. I believe in August we're going to have um, a curve decrease in emissions. So that's a deflationary event. So curve constantly has to be locked to account for dilution of the circulating supply. Daniel, this is a broad question. It depends on a person's situation, but if you had a couple of $1 million, would you throw it on the curve and make 400 grand a year and call it a day, or own BTC and borrow against it? Um, I struggle with this question. Not the couple $1 million part, but curve versus collateral assets, because clearly there's some serious systemic meaning for Bitcoin and Ethereum, as well as plenty of other assets. But excess exposure to those other assets decreases working capital, which means it's an opportunity cost. But no exposure to Bitcoin and Ethereum is potentially a missed opportunity, depending on how the global financial system plays out. So I don't know. I don't have an answer to that question, and I struggle with that question on a daily basis. So, Daniel, you are spot on. There is no answer to that question because the answer is speculative. And nobody will know the answer to that question. But I think you just hit the nail on the head. What is the most important question? Collateral assets versus working capital or platform ownership. I mean, man, look, 400K, and it's not 400K because it's emissions denominated in Curve. Oh my God. And Curve and CVX produces also 3 CRV emissions. So you get dollar denominated emissions. So theoretically, the Curve emissions can be used to accommodate for dilution. You also get 50% of the CVX is denominated in CVX. So CVX stake gives you CVX emissions, which is a percent of the convex platform revenue. So you're able to basically accommodate dilution, increase platform ownership, but also grow your 3 curve emissions, which are dollars. So CVX has emissions in dollars. In addition to the base APY, well, the base APYs are well, that's probably where the 3 CRV comes from. Whatever. Point being, that's probably the best question uh, I've heard in a bit. Kudos, Daniel. FM. So you're talking about getting the staking dividends from staking CRV. Dividends, platform ownership. You own a part of the business of a digital forex market. Damn, that's a serious story right there. So that's a story that I like, and I have my assets. I have Bitcoin, Ethereum, a bunch of other shit sitting around, just hanging out on the portfolio on the balance sheet, just chilling, doing whatever the hell they're doing. They're all working. Some of them are POS assets. Other ones are in an AMM position, like Curve Tripool. Other ones are some of the Cosmos assets that are interest is derived from inflation. But shit, some good questions today, guys. Truly, damn right. HSBC can't compete. They got nothing. Here, I heard that Swiss bank that's uh, uh, acquiring these yield-bearing DeFi assets. I think we're on the precipice or the critical threshold of something interesting. Brian, you're very welcome. So I'm happy to help the best I can, and I know the protocols are complicated, which is why I always advocate for new platform participants to deploy dollars to Aave, because Aave is a bank account. And Curve, you got to understand how wallets work. You got to understand how staking works. Got to preferably have a hardware wallet connected to DeFi vis-a-vis MetaMask. So there's definitely a learning curve to interacting with these protocols effectively. I myself am happy to help the best I can. I'm very time limited. I haven't had office hours and I can't remember since. But Discord is 24/7. Everyone on the Discord channel is helping everyone. That's a wonderful, wonderful place for folks to get together to do things different. And they're all on the same page of the "We Can Do Better" mantra. So the Discord forum is great. The Discord forum, you find it in the profile of Twitter. I'll put it up here. Here's the three links. I should do this daily when I start the stream. What about owning YFI? YFI is big deal. Those boys are mega brains. They're going to own a part of the entire DeFi space when all things said and done, and they're a significant part of the financial system. So YFI is just something I don't have at the moment. I think um, that's not what best expresses my view of the market. Truly, risk tolerance. That's spot on. Quantified Signum. Yeah, off my radar right now, and not something that I know much about. But overall, not much to show today. We could take a look at I could take a look at some charts real quick for the fun of it. Nope, wrong tab. Oop, wrong tab. Oh, right tab. JT is the best to follow for technicals, and a bunch of folks in Discord are really, really good on technicals. Um, no, actually, nothing much interesting from a technical standpoint, meaning at least we're above 382. I believe that's 382. 0.5 is above, but it's below that previous trend formation. So obviously we're like riding support. If that's considered support, given that it was breached to the downside, I don't know. But Bitcoin, this is a heck of a congestion region that is consistent with a head and shoulders, ugly head and shoulders in many regards. Whether it's bullish or bearish, I could care less about these prices. I just operate the business, and the weekly revenue stream is what's pertinent. Um, all my Ethereum and Bitcoin right now is in tripole. Nothing is just held naked. And I'll see how it plays out, but makes me comfortable to know that the assets are working and they're not just dormant, stagnant equity. There's nothing worse than stagnant equity. Curve USDT, 2.25, heck of a price point. Let's take a look at curve denominated Ethereum. I mean, clearly there's a floor there, heck of a floor. Let's check a look at Bitcoin real quick. I don't think it's configured. I had to kill some of these processes. Takes a lot of memory to operate all this stuff. Yeah, curve Bitcoin increasing higher lows. That's nice to see. Looks like a ceiling. Looks like a massive, massive uh, uh, ascending triangle. How that plays out, we'll see. Because this is a massive. This could take months. This will take months to play out. But whatever. That's just a very speculative trend formation. Not so. It's not on my radar very much. If you had Curve in your wallet, would you recommend staking them on Curve? There's absolutely no reason to have naked Curve. And for myself, I don't opt for staking on Curve as VE Curve. It's just way more lucrative to lock them in CVX CRV. And YV CRV is considerable, but CVX CRV just really hits everything that's meaningful from a business model perspective. Do you like Phantom Network? Very much. Very much. I've been killing it in the Phantom DeFi ecosystem. Yeah, Phantom's a big deal. Solana's a big deal. Avalanche is a big deal. Elrond's a big deal. Um, Polygon's a massive deal. Indian narrative is incredible. Um, a lot of these L1 Algorand's probably a big deal. Cardano is a big deal eventually. Unless one of these L1 unless these L1s don't have critical mass liquidity, a money market, and critical mass monetary velocity, there's no reason to deploy capital to the platform asset. Like I'll deploy capital to Cardano when it actually has a functioning system. Right now, it doesn't do anything. So there's literally owning Cardano is just pure opportunity cost from a business model perspective. You can't borrow against it. You can't put it to work. You can't deploy it in an AMM. You can't provide liquidity. It's a non-functional asset. So any capital deployed to it is just wasted capital because it's stagnant equity. The same reality applies to all those other assets. Unless you can collateralize an asset, it's pure stagnant equity. Dot just released mainnet. Yeah, I heard about that. Pretty cool. I look forward to seeing how, because they have a very advanced pre-development of their DeFi protocols. They were really like Ren and Akala and Plasm. Big deals, big deals. But there's no reason to deploy capital until the networks are online and the bridges are seamless. Polygon's killing it because that bridge is seamless. It works really well. Do you think owning some Bitcoin is necessary? Many people think owning Bitcoin is a necessity in the crypto space. Bitcoin's opportunity cost incarnate, but it has the global macro narrative for value storage. So um, hard choices. I don't think it's necessary, but um, that's a complicated topic because Bitcoin has a heck of a narrative. The billionaires are talking about Bitcoin. They're not talking about the other assets, other than Mark Cuban, who's really hitting hard on the DeFi assets. So interesting times we live in. No answers. There's no clear answers to certain questions. A lot of the answers are subjective and opinion. No precise, specific way to do these things. Um, Quant Network is calling me. Yes, Quant's a big deal. Quant's a big deal. I can't collateralize it though, so it's just too much opportunity cost for me to have on the balance sheet. But it's a heck of a technology. Julie, Solana seems promising too, of course, but same thing. Same thing. You know what I look forward to? Curve deploying on Solana. That's what I look forward to. Joe, Cardano can't be staked for 5%. 5% is a massive, massive amount of opportunity cost. Um, what because what do you if you have 100 grand in Cardano, you get 5 grand a year. But if, for instance, if it was Bitcoin, you could take 35 grand and earn like 20-30%. So there's just a lot of opportunity cost with it. It's just missing that capital is missing out on a huge amount of opportunity in the DeFi space because the weekly revenue stream is what counts. It's not the principal. You need to be making money. You got to execute and deploy the balance sheet as a business. Otherwise, what's the point? You got all these assets. Are you really going to sell them? Are you going to sell your assets that you worked so hard to accumulate? No, you want your assets to produce revenue. That's the novelty. That's the difference between 2017 and 2018. There's nothing novel whatsoever about staking assets to get inflation yield. That's 2017 and 2018. We might as well all have master nodes at this point. That clearly didn't work out. The novelty is collateralizability and platform transaction fee revenue share. Completely different than 2017. Can you borrow against Matic? Yes, on Aave Polygon. Um, yeah, but the problem, Kenji, is that it's 5% from inflation. So it's dilutive. It's not like it's 5% because the circulating supply is expanding. So technically it's 0%. So the 5% is merely keeping up with inflation. There's a lot of protocols like that. Blocknet is anything POS is keeping up with inflation. It's debasement, so the currency is being debased, but you're getting you're getting the debasement. So basically, the value of your assets is increasing. Um, you can ladder stake Hex is performing really well. Yeah, but I can't do anything with the asset. The asset is pure opportunity cost because it's not collateralizable, so I can't generate any real value from it. Unless you could, there's maybe a derivatives platform that wants to automatically sell it, so you get interest, you sell, interest, sell, sell, sell. So Hex does nothing unto itself. It's a self-contained ecosystem, and that's not something I want exposure to at all. I want exposure to assets that produce dollars or produce assets that give me a revenue share. And unfortunately, that asset does neither. Issue, I guess, is that Solidity, Rust, a lot of blockchain developers are versed in it. Sure, Solidity that's meaningful. But I look forward to Cardano's DeFi ecosystem. I look forward to Solana's DeFi ecosystem. I look forward to all their DeFi ecosystems. And what I'm going to do is I'm going to use the crap out of them, execute my business. I'm going to DeFi them, defile them with DeFi. Have you evolved into a curve maxi? Noah, there's worse things to be, I suppose. Yeah, definitely curve maxi at this point, my friend. Daniel, curve emissions coming to Polygon Thursday, I believe. RMBTC pool launched on Curve Polygon today. Big deal. Would you ever consider using Alchemix if they release a WTC portal. I would use Alchemix to manage um, debt positions, meaning if I buy a car for 15 grand and I put 30 grand into Alchemix and I use Alchemix to pay the debt payments or something like that, I will use Alchemix to manage real world debt positions. So Alchemix is a really convenient derivatives platform, very powerful. How do you produce revenue with BTC? Tripool, WBTC, Run BTC. So currently, I'm using it as a passive position. I could probably be more aggressive with Bitcoin and Ethereum, but I just don't have the time for it. So those assets are just going to sit in Tripool. Tripool is likely going to have incentivized curve emissions. It'll get a gauge, and Convex will wrap it into a derivative, and just that's the way it's going to work. So that's I like that position for the macro assets, Bitcoin and Ethereum. Where do you recommend placing USDC if you own zero curve tokens? Yearn in the USDC pool on Yearn, or uh, uh, 3 pool, or the Aave pool, or the S Aave pool on Convex are great places to put them. Um, any tips on how to start a curve position from zero? Your views on revenue? Yeah, dollars, 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 dollars. That's a great way because we have no idea what's going on with macro financials. We have no idea we're going to have a deflationary implosion or not. So take your dollars and throw them on curve. I know there's a learning curve. But that's a great place to accumulate CRV, and you'll get the maximum amount of curve emissions from convex, whereas urine auto compounds them back into dollars. But deploying dollars, keeping them as dollars until you understand the volatility of the assets and how to turn the assets into working capital, dollars is the best way, or really the only reasonably recommended way to start engaging with the crypto space. Uh, I, you can't tell people to buy assets because um, they're extremely volatile. But dollars are a great way to start getting exposure to the crypto space. Solana needs That's right. So Solana needs a money market and needs a forex market, and it needs to reach critical mass monetary velocity. So that's it. That's all it is to build a financial system. We've seen it twice with BSC and then with Polygon. Simple as that. Simple as that. Now I feel so stupid that I locked 25% of my ETH in Coinbase ETH staking. Not necessarily. You know, there's a big deal with 32 Ethereum. That's a big deal. So, there's no. I wrestle with these conversations. Everything that you guys are talking about are things that I struggle with on a daily basis. 32 Ethereum is pretty meaningful. It could potentially be an entire business in the coming years and produce an entire salary, and you'll never have to work again the rest of your life. How could you ignore that story? That's a heck of a story. Hope and dreams are involved in that story. I don't know. Or you could access the equity in it and put that equity to work as working capital, or you could just throw it in Tripool and let that thing build and accumulate and grow over the years. I don't know what the best way to do it is. I don't know. But each one of those is very interesting to contemplate. Don't feel stupid for it you did. F 2.0 is a very meaningful narrative. A good stablecoin pool brings liquidity, I think, of course. How does ALF work? Seems like a Ponzi. Nothing that Alchemix does is has is unreasonable. So everything they did with ALUSD was wonderful. That's a heck of a derivative. So I don't know. I haven't done my due diligence because I have no interest in deploying or just having a position. But man, I like that Alchemix team, which is basically Scroopy Trooples. It's cool. Let's wrap this up. Got some meetings this afternoon. Thank you all. Tuesday, June 15th, 12:55. In conclusion, just do everything different. Do everything we can do better. And if you're new to the crypto space, deploy cash. Stay in cash until you get a sense for the volatility of the space. Um, uh, Value storage assets are extraordinarily meaningful. Each one has a very different narrative, Curve versus Ethereum. Make sure your chosen assets are collateralizable. Make sure all assets in the portfolio are put to work in a balance sheet type implementation. Focus on revenue rather than your principal valuation. And, Have contrarian ideology. Think different. It's not just buy and hold. That's just pure opportunity cost, boys and girls. Anchor protocol and the insane APY. What's insane APY? I'm getting 100% on Curve. You want crazy APY? It's that iron finance shit on Polygon right now. That's an entire story unto itself. Anyway, I wish you all a wonderful day. Stop by Discord. Tell everyone to subscribe, and I will see you tomorrow. Peace.